Lewis, do you also use fair value gap or just order blocks? Everything should be used within context. So to be clear, I don't use fair value gaps as a point of interest or as an entry model or anything of that nature. But I do use fair value gaps to understand that that is where price may want to trade back into, right? So just as a liquidity void, as a potential target for price, you have to understand that, if you do the test, you collect the data and you watch, thousands and thousands of days worth of price action, really, you'll quickly understand that fair value gaps are often traded back into, or they're often mitigated, or things of that nature. Do we know about the pullback? What do we look for? So with a pullback, what actually classifies a pullback is a 3-candle pattern, essentially. But a lot of people make the mistake in thinking that those 3 candles have to be formed a certain way. Let's say you have a high and a low, right? This is the swing level. Now, let's say price has 1 bearish candle pullback, and then 1 bullish, 2 bullish, 3 bullish, 1 bearish, 1 bullish, another bearish candle pullback, right? So there's lots of different bullish and bearish candles. Every up move is a bullish candle. Every down move is a bearish candle. Let's just say that, right? So you can see we have 1 bearish candle, 2 bearish candles, and 3 bearish candles, and then a bunch of bullish candles. In this scenario, this wouldn't be a pullback, right? So if price then decided to continue trading higher from here, that wouldn't be a pullback for me, because what we notice is we have 1 bearish candle, and then the second bearish candle doesn't close below the first bearish candle, and then the third bearish candle does close below the first one. So that would actually only give me 2 candles in total, right? So because it would only give me 2 candles in total, that wouldn't be a pullback. Now, let's say, for example, we had that same one, and then the second one does, and then we have a bunch of other bullish candles, and then we have another bearish candle, and then we have a push up. Well, now what you can see is we have 1 bearish candle, the second bearish candle that closes below the first one, and then the third bearish candle that closes below the second one. That is a 3-candle consecutive move, right? There are 3 candles in the opposing direction in between the swing high and the swing low. Therefore, that constitutes to being a pullback. So I hope that answers the question of understanding pullbacks. Do you suggest swing trades to day trading? Your style of trading can vary on so many different things. You have your personality type, you have your goals, right? If you're the type of person that just can't, like for me personally, I don't like to be in a trade for consecutive days. I find that honestly, like genuinely, if I'm in a trade overnight and I haven't secured partials or things like that, I genuinely find that I have a worse sleep because I have that on the back of my mind that I'm in a trade. So I know, yeah, sure, with maybe some reconditioning, maybe some work on my psychology, I could get to the point of handling that. But I've tried many times holding positions overnight and it just plays with me. And so, yes, I can do it, but it affects me psychologically and therefore it doesn't work for me. So I just don't do it, right? Unless the only way you'll see me holding a position overnight, right? So for example, this position that we took yesterday in the community, you can see I took most of my partials at 6 risk to reward, right? Most of my partials I just took at this low in here. And so now if I leave a small position running, 10% of the total volume, 20% of the total volume, I don't mind leaving that open. I have my stops at break even. I've taken the majority of my position off at my partial level. Now I have no psychological investment. So therefore, it's easy for me to essentially leave some of that position running. But if that was my full position right now, I wouldn't feel comfortable. And so for me, because of that, I just prefer, intra-session. So I will typically trade London session. Maybe sometimes I will cross over into the New York session if it makes sense to. Again, everything is within context. If it makes sense to cross over into that New York session, as I did, for example, yesterday, there has to be a reasoning behind why I cross over into the New York session. And yeah, I much prefer getting into the market and either, taking a stop loss, taking a break even, or hitting my first partial same day, ideally same session, right? That's why you'll see me have, relatively small stop losses, relatively small targets, and then some larger targets. You can see it right here. We're looking for an old 4-hour low. Right? Just some larger targets, old 4-hour low in here. Larger targets, but I've already taken my partials off. Therefore, it's very easy on me psychologically. So again, swing trading, it all depends on your personality. It depends on your goals as well, right? Goals are another thing that factor into it. there are different types of traders. There are different people that are trading for different reasons. You may be a trader. Genuinely, you may be a trader. You could be a retired professional who already has, a few $100,000 in the bank. You've retired, and your goal really is to just sustain your income from your job from trading. Well, swing trading may be something for you, because now you only have to make, aim for a couple of % a month to maintain that same level of income. And maybe it's easier for you based on, how much time you want to invest into your craft to be a swing trader, a more passive trader. If, for example, you are someone who is more aggressive and wants to, I personally, I could be completely wrong, but I genuinely do think that, scalpers or intraday traders, I guess they typically make more money because there is more opportunities. A lot of the time, smaller stop losses because they're trading, smaller time frames, and, that is usually equal to higher risk rewards. So that's the reason, again, another reason I personally enjoy trading, short time frames. So it really depends on your goals. It depends on what you're looking for, and also your personality trait factors into it. So don't look at your, style of trading from the lens of, does this work better or does this work better? Look at it from what works best for me, right? Get to know yourself, right? Because at the end of the day, trading is nothing but a mirror. It's going to mirror back to you, everything, your personality traits, your flaws, everything, right? Your insecurities, all of that stuff. So why you chose 3 candles for real pullbacks, and what do you think about entering the positions using some specific fib level and not the order block candle? Great question. So why did I decide to use 3 candle rule for my pullbacks? I experimented with a bunch of different things. So again, to go full circle, the main reason was because, like a lot of you guys, at some point in my journey, I was bamboozled with market structure. Because the reality is that if price delivers like this, right? Let's just say price delivers like this. Again, very random delivery. If price delivers like this, as you see a lot of the times it does, well, I was having the issue, which is like what a lot of you guys are having the issue of, well, how do I know what is a swing level and what isn't? Like, how would I know if this is a swing level and then now we've changed to bullish? Oh, wait, actually we go bearish. Like, how do I interpret this? And there were so many times where I would look at the market and I'd be like, okay, we're bearish. And then I'd look again and I'd be like, actually, wait, maybe we're bullish because maybe that was a high and that broke that. So maybe that's a high. And it just got to the point where I was like, you know what? I can't apply discretion to my market structure. And this is a great point, actually, because this allows me to kind of go off on a different tandem, which is the importance of systemization and automation in your trading in your earlier years, right? Because at the end of the day, you don't have the ability when you're just starting out, or when you only have a little bit of experience, let's say a year, 18 months, you don't have the ability because you don't have the experience, and you don't have the wisdom because the wisdom comes from the knowledge applied turns into wisdom. So you don't have the experience, which means you don't have the wisdom to be able to make discretionary decisions in the market, meaning decisions that sometimes are able to deviate from your rules. You don't have that ability because you haven't spent enough time in the craft. And it's that simple. So the best thing that you can do in your earlier years, and when you're just starting out, or even if you're, on your way to profitability and you still don't really properly understand the market to the point where you can really understand what price is likely to do. If you don't have that, then it's ideal that you search for kind of mechanisms, principles, processes, automations, and systemizations, all the kind of same thing. The systemization of your concepts and become a rule-based trader. So you want to make your edge as systemized and rule-based as possible. And so that's something I found out, and that's something I was looking for. I was looking for the perfect strategy, which obviously doesn't exist. And I wanted that strategy to be step 1, step 2, step 3, step 4, step 5, tick this box, tick this box, tick this box, tick this box, buy, sell. Right? That's what I was looking for. And that's what I wanted to try to build. And, there are pros and cons to that. The cons are that when you become more of a seasoned trader, when you have the ability to make discretionary decisions, it can bite you in your ass sometimes, because your rules may indicate one thing and you know that something else is going to happen just through knowledge, just through wisdom, just kind of this like little inherent intuitive tell, when it's really just pattern recognition subconsciously. And then, you act on your rules and you see what you actually playing out. So there's a fine line at some point to balance, mechanical rule-based systems with discretion, which is where I am at now with my journey. But at some point in time, I really needed, and I still use it 95% of the time, I really needed some sort of rule-based mechanism that told me, are we bullish or are we bearish? And I tried a bunch of different things. I tried, 1 candles, I tried 2 candles, I tried 3 candles, 4 candles. I tried certain fib extensions. I tried certain pip counts. And just what I found to be the most consistent and the easiest to follow was 3 candles that break each other in the same price leg. The issue with the Fibonacci's, was that too many times the variable would then change, right? Because if I looked at the Fibonacci and I said, I need to have a price pull back at least 50%, which at some point I did have that as a rule. Price needs to pull back at least 50%. Well, a lot of the times price would pull back 40% and then it would go again. And well, now I would need to, let's say it looked like this, I would need to see price pull back to 50% of this whole region again, right? And not 40% of the not 50% of the current leg. So what would happen eventually is, let's say price then did the same thing again, right? Let's say price didn't pull back to the 50%. Let's say it pulled back to 40%, which was 50% of this leg. And then it went again. Well, now I have to extend it. And now I need to wait for price to pull back to this 50%, right? And you can see how time and time again, it just becomes so inconvenient for it to be considered a pullback. Because a lot of the times what was happening was there were scenarios in which, let's say it looked like this, right? And then price did something like this, pull back 40%, and then broke the lows. And then if I put my fib down, right now, look at what happens. My 50% is higher than this swing high. So I would essentially be trying to short in here, when actually my rules now would be like, no, hold on a minute, we've actually shifted bullish. And my logic would say that. I would look at it and I'd be like, well, 50%'s here, that's my rule. But if I look at this, I'm pretty sure that if price breaks that, now it's going to trade higher. And it would a lot of the time. And I'd have it as set at the 50% as my mechanical rule. And then again, time and time again, price would come into my 50% and I would look at shorting and price would just take me out. Because it was actually, flawed to begin with. And only through testing and only through collecting data and only through getting burned will you ever get to these conclusions. And that's why most traders quit, because they aren't willing to put in the reps. They aren't willing to put in the time. They want it to be easy. And at the end of the day, anything worth having in life typically doesn't come easy, especially a skill set like trading, right? Trading has the potential to be one of the most valuable skill sets you could possibly ever have in the world. You can attract millions and millions of dollars and you only have to return a couple of % a month and you can make serious bank. So with a skill set that's that valuable, you really think it's going to come easy, right? Because in life, money follows value. And the more valuable something is, typically the harder it is to do. That's why it's more valuable, because there are less people doing it. It's just the law of supply and demand. The skill of being able to cook a meal in a restaurant is far less valuable than being able to consistently return a few % a month in the market.